Welcome to Behind the Campaign, where we unpack real marketing stories, dive into case studies, and break down strategies that make learning marketing easy and fun. Get ready to uncover the secrets behind successful campaigns and discover how you can apply them to your own brand. Let's dive in.
Ever stop to think about how we shield ourselves and our businesses from the curveballs life throws? We all try to build some kind of protection, right?
That's right. It's a fundamental human desire, whether we're talking about saving for a rainy day personally.
Or putting contingency plans in place for a company.
Exactly. Ultimately, it's about understanding potential risks and putting strategies in place to lessen their impact.
Which brings us nicely to the focus of our deep dive today. Zurich Insurance Group. It's a name most of us probably recognize.
Oh, definitely.
They're a truly global operation. What is it? 60,000 people?
Yeah, across 170 countries, all dedicated to helping customers not just understand risk,
but crucially protect themselves from it.
They have an immense reach. And when you consider the sheer variety of what they offer.
Like car and home insurance.
Yeah, that's the general insurance side.
Yeah.
But also life assurance, pensions, investments through their life insurance arm.
So covering individuals and big corporations too.
Absolutely. They play a pretty significant role.
And the core idea of insurance is, well, fairly straightforward on the surface, isn't it? You pay a regular fee, the premium, and in return, you gain financial security should those, unlikely but high-impact events actually happen.
Like a building fire, yeah. Or a burglary, maybe an accident.
Exactly. It functions on that principle of shared risk.
Where the financial burden of a big loss gets distributed across a large pool of policyholders.
Makes sense.
So today we're kind of on a mission. We want to explore what makes a leading insurer like Zurich really tick.
What keeps them at the top?
Yeah, what are the key factors behind their success? And we're going to zero in on a really vital aspect of their operations, budgeting.
Yeah, budgeting.
It might sound a little dry, maybe.
Maybe a bit.
But it's absolutely foundational. Foundational to the stability and the long-term success of any large, complex organization.
Especially one operating across so many different markets like Zurich. We've got some really insightful material to get into this. We're looking at text that gives us a good look under the hood at Zurich's operations.
And also the basic principles of effective budgeting itself.
Okay, let's dive in then. What are the core elements that make a company like Zurich a leader in such a, competitive industry?
Okay, well, several things feed into it. Their brand reputation is huge. Customers need to have confidence in their insurer.
That trust factor.
It's paramount. And that trust is earned through consistently high-quality customer service and critically robust financial strength.
You need to know they can actually pay out when you claim.
Exactly. Policyholders have to be sure their insurer will be there to meet their obligations.
Makes total sense. And does the regulatory environment play a part? Insurance is tightly regulated, isn't it?
It certainly does. The insurance sector operates under really stringent regulations. It demands strict adherence to standards.
And requires a workforce with pretty sharp financial skills, I imagine.
Highly developed financial acumen, yes. So this naturally attracts top-tier graduates, people looking for careers that require precision and, deep expertise.
Interesting. So the regulations themselves kind of help lift the standards for everyone?
In a way, yes. It sets a high bar.
Our sources also mention Zurich's core values, things like corporate responsibility.
Yes, and that's increasingly important, isn't it, for consumers today?
Definitely.
For a company like Zurich, it goes beyond just processing claims. It's about their wider impact on society.
Like that Zurich Community Trust in the UK.
Exactly. Supporting charities, contributing positively to the communities they operate in, it shows commitment.
Yeah, it adds another layer to their identity. But let's not forget, at its heart, insurance is a business. A very competitive one.
Oh, extremely competitive. Customers are savvy, they compare offers, look for the best value.
So that pressure is always there.
Always. And this intense competition just underscores how important efficient operations and tight cost management are.
Which brings us right back to budgeting.
It does. Budgeting is a key strategic tool for gaining and keeping that competitive edge.
Okay, so we've established budgeting is crucial for Zurich. Let's pull back a bit, though. The fundamentals of budgeting itself. What is a budget in a business context?
Simply put, a budget is a business plan expressed in financial terms.
Okay.
It outlines projected sales, what you expect to spend, any planned investments in things like equipment or buildings. Think of it as a financial blueprint.
So it's more than just adding up numbers. It's about translating the big picture strategy into actual financial targets.
Precisely. And while creating budgets often involves looking back, analyzing historical data to forecast the future.
Like past sales trends.
Exactly.
Mhm.
But it's vital that these plans are, grounded in reality. They need to be realistically achievable. Hope isn't really a strategy.
No, definitely not a financial one. Needs to be practical. And it's not just done in a silo by the finance department, is it?
Oh, no, not at all. Managers at various levels all through the organization, they get involved. They develop budget proposals for their own areas.
For their teams or departments.
Right. And then these individual plans need to be coordinated, aligned, so they all feed into the overall master budget for the whole company.
So it's a collaborative effort.
Very much so. Input from lots of different teams.
Making sure everyone's pulling in the same financial direction. And these budgets, they aren't just created and then filed away, surely.
Absolutely not. Good budgets should be, well, stretching. They should challenge managers to perform better.
To push them a bit.
Yeah, but still remain achievable. They need to support both the short-term and the long-term financial and strategic goals.
And they often act as motivators, too. You mentioned targets earlier.
Yes, they often serve as motivational benchmarks. Sometimes they're even linked to performance bonuses to encourage people to hit those targets.
That makes sense, incentivizing performance. But our source also stressed they need to be adaptable. Budgets aren't set in stone.
Critically important. Budgets need ongoing monitoring, regular review, and the flexibility to be reassessed if things change.
Like internal factors.
Yeah, maybe the actual cost of a project turns out way different from the estimate. Or external factors, a change in regulations maybe. That can have a huge impact.
So it's a dynamic tool, constantly refined. Now, thinking specifically about Zurich, this massive global organization, how does budgeting work across its main business segments? General insurance, global life, farmers?
Right, those are the three core segments. And each of those is broken down further into regions like Europe.
And then smaller units.
Yes, like
Yeah.
UK life, for example. Budgets are set at each of these levels through discussions. Lots of stakeholder involvement.
To make sure it all aligns.
Exactly. The goal is a cohesive network of interconnected budgets, all supporting Zurich's main corporate aims. It's detailed, but it all links up.
Okay, got the fundamentals. Now, the specific advantages budgeting brings to an insurer like Zurich, it's clearly more than just tracking money in and money out. Yeah.
Oh, absolutely. As our source points out, budgets are like a financial translation of the company's strategy.
Right.
The actual process of creating a budget forces managers to think ahead, to really consider the resources needed to hit their goals. And this planning is especially critical in insurance.
Why, particularly for insurers, what's unique there?
Well, because insurance products often cover medium and long-term needs. Decisions made now can have financial ripples years down the line.
Okay, like long-term life insurance.
Exactly. Take that UK life insurance product we read about protecting mortgage costs if someone dies. These policies can run for 15, 20, even 25 years.
Wow, yeah.
And Zurich guarantees the premium for that whole time.
That's a huge long-term commitment for them.
It is. So when they calculate that premium way back at the start, they have to make very careful assumptions.
About things like how long people might live?
Mortality rates, exactly. And how many people might cancel their policy over those 2 decades.
And if those assumptions are wrong?
It can seriously impact their profitability. Either way, good or bad, but over a very long time. Budgeting forces them to think hard about these long-term scenarios.
It's like when they sell that 25-year policy, they're making a bet on the future, aren't they?
In a way, yes. On longevity, economic stability, even societal changes. Their budget isn't just about next quarter's expenses. It's this long-range forecast underpinning the promises they make.
That really highlights the long-term strategic thinking needed. So, anticipating outcomes decades away. What other benefits does budgeting bring?
Well, it's essential for monitoring and controlling financial performance.
How so?
By systematically comparing the actual results against the budget figures, that's called variance analysis, they can pinpoint where things are going well and where they aren't.
And when areas are underperforming, weak performance, as you put it.
Right, when actual results are worse than budgeted, those are adverse variances, it flags potential problems.
So management can step in.
Yes, if targets aren't being met, they can investigate why and implement corrective actions. And, like we said, those targets themselves can motivate people, especially if bonuses are tied to them.
Right, the incentive part.
Right.
And you touched on how budgets link together. Sales, production.
Yes, absolutely. Sales budgets, project revenue. That drives production budgets, what it'll cost to deliver. It all feeds into the overall profit goals. It's like an intricate financial ecosystem.
Okay, so budgeting is indispensable, but look, it can't be a crystal ball, can it? Especially now the world changes so fast. What are the challenges?
That's a great point. The simple approach, just adding, say, 10% to last year's budget lines, incremental budgeting, that rarely works in the real world.
Why not?
Well, to sell more, you might need to cut prices, right? Or
Okay.
offer discounts.
Okay.
And yeah, selling more might lower your cost per unit because of economies of scale.
Producing more makes each one cheaper.
Potentially. But getting those economies might require big upfront investment in, say, more factory space or equipment.
So the relationships aren't simple, not linear.
Exactly. And while past financial accounts tell you what happened, budgets are about the future. They're built on assumptions.
Assumptions, like what?
Some are explicit projected wage costs, market research findings, but others are more implicit.
Implicit. Such as,
Things like potential leadership changes, how stable your supplier relationships are, shifts in the wider economy. Harder to pin down.
those sound tricky to get right. And for an insurer like Zurich, they must face some unique challenges here.
They definitely do. Unforeseen changes in legal or financial regulations can hit them hard. Market dynamics, shifts in the economy, what competitors are doing.
And the risks they actually insure.
Yeah, they need to forecast the very risks they cover. Short-term things like floods, earthquakes.
And long-term trends like people living longer.
Exactly.
Yeah.
Mortality rates changing over decades. It's a huge range of uncertainties to try and factor in.
Plus, budgets need to allow for future growth, right? Investing in new projects.
Yes, planned investments in projects, long-term improvements that might not pay off immediately. They need to be included.
It also sounds like there could be internal friction, departments competing for limited budget funds.
That's a classic challenge in big organizations.
Yeah.
If, say, marketing gets a bigger slice, that might mean operations gets less.
So how do they manage that?
At Zurich, they use these business partners. Their job is partly to help mediate these potential conflicts.
To ensure fairness.
Fairness, but also strategic alignment, making sure resources go where they best support the company's overall goals. They act like internal consultants, bridging gaps between departments.
Okay, so these partners ensure the budget allocations serve the bigger picture. Interesting that the source also said analyzing budget data can uncover opportunities.
It can, yeah. Digging into the numbers, the variances, you might spot inefficiencies you can fix, or maybe even see early signs of a new market trend you could jump on.
So it's not just about control, but also insight.
Exactly. Budgets need to be based on the best info available when they're made, but they also need that flexibility to adapt. It's a balancing act.
Okay, so we get the importance and the challenges. How does a huge company like Zurich actually set and then use these budgets day to day?
Well, our source mentions two main approaches generally. Top-down,
Where senior management sets the targets.
right, based maybe on past results, strategic goals, and it cascades down. And then bottom-up.
Where middle managers build it from the ground up.
Exactly. Based on their detailed operational needs, and it gets reviewed higher up.
And Zurich uses a mix, a hybrid.
That's right. They start with a top-down ambition setting. Senior management sets the strategic frame, the big financial goals.
Provides the context.
Precisely. Then, managers lower down, take that context, and use historical data, current trends, new factors, whatever, to build their detailed proposals. That's the bottom-up piece.
That makes sense. Strategy from the top, operational reality from the ground. And those business partners pop up again here.
Yes, they're key in ensuring joined-up budgeting,
Yeah.
making sure everything connects properly.
Connect in what specifically?
Revenue centers, the parts generating income, doing sales budgets, cost centers, managing expenses, doing operating budgets, and making sure it all aligns with the overall profit budget.
Got it. Making sure all the financial pieces fit together. The source also mentioned an alternative. Zero-based budgeting. What's that?
Right, ZBB. With zero-based budgeting, every spending line starts at, well, zero each budget cycle.
Nothing is assumed.
Correct. Managers have to justify every single penny they want to spend from scratch, not just, we had this much last year, give us a bit more.
Like starting with a blank slate every year.
Kind of. Imagine clearing out your fridge completely and having to justify every single item you want to put back in based on your current needs.
That sounds thorough, maybe time-consuming.
It can be. The big advantage is it forces really proactive critical thinking about why you need the resources. It stops spending just rolling over automatically.
But the downside.
It can take up a lot more staff time and effort. That detailed justification for everything.
Right, a trade-off there. Okay, so once the budgets are set, how does Zurich actually use them? Something about a dashboard.
Yeah, once the results start rolling in, the budget becomes that dashboard for checking performance. Comparing actual figures to the budget, the variance analysis we talked about lets them see quickly if they're on track.
And how do they read that dashboard? Some deviations matter more than others, right?
Exactly. They often use a traffic light system. Green means you're on budget or better.
So generally okay. Maybe even look for good ideas there.
Right. Investigate for best practices or new opportunities. Amber means you're a bit off target.
Keep an eye on it.
Monitor the trend, yeah. See if it's getting worse. And red means a significant adverse variance.
Alarm bells.
Pretty much immediate investigation needed to find the cause and take action to get back on track.
So it helps prioritize where to focus attention. And it's not just if there's a deviation, but why.
Absolutely crucial. Those business partners, again, they work with managers to understand the root causes behind significant variances.
And they look forward to forecasting.
Yes. They assess how current deviations might impact future performance against the budget for the rest of the year and against the overall business goals.
So it's not just looking back, but projecting forward. And these variances, they can signal more than just being over or under budget.
For sure. A deviation might be a one-off, unforeseen event.
Yeah.
Or it could be the first sign of a bigger negative trend.
Requiring a change in strategy.
Potentially, yes.
Yeah.
A new counter strategy might be needed. So analyzing trends over time acts like an early warning system, gives valuable clues about where the business might be heading.
Fascinating. It really sounds like budgeting, when done well, is way more dynamic and insightful than just, accounting.
It really is. It's a dynamic, strategic, ongoing process.
Yeah.
Absolutely critical for navigating the complexities of a global insurer like Zurich.
So to wrap up our deep dive then, the key takeaway feels like effective budgeting isn't just some routine financial chore.
Not at all.
It's actually a fundamental source of competitive advantage for a complex global company like Zurich.
Precisely. It needs careful research, realistic planning, and really strong collaboration across the whole company.
And it's not just about keeping things stable. It can actually help set ambitious goals, maybe even explore new business areas.
Exactly right. And the level of ambition, the amount of stretch in the budget, the risk appetite, that's often influenced by the company culture, stakeholder priorities.
Like what shareholders expect.
Yeah, exactly.
And ultimately, making this all work relies on having skilled people, doesn't it? Graduates, finance pros who can manage these budget dashboards.
And interpret the data effectively to help the company hit its target.
Absolutely. That ability to understand and act on the budget information is critical at Zurich scale.
Couldn't agree more.
So thinking about all that complexity, Zurich budgeting for long-term risks, things like mortality rates changing or huge natural disasters, what other maybe unexpected factors could throw a wrench in their financial planning? And, ultimately affect the premiums we all pay. Definitely gives you something to think about.
Thanks for tuning in to Behind the Campaign. We hope you enjoyed this story and took away some valuable marketing insights. Don't forget to subscribe, leave a review, and share this with a fellow marketer. Until next time,